Welcome to today's webinar where we're going to be focusing on all things transaction fees and also cost-effective ways to successful fundraising. I'm joined today by one and only Ben.
Hello again.
Hello again. I thought you weren't going to say anything.
Yeah, well, I was going to leave you hanging.
I know. Don't do that in front of the good people. We had a great and informative session last time round where we focused on an introduction to who we are and also the importance of contactless devices and contactless solutions and contactless fundraising. Do you want to quickly touch upon some of the things that we covered off for anybody that may have missed last session?
Yeah, I mean, the main focus was about the importance of embracing this kind of technology and these resources. It's been in the news, obviously, that cash is on the increase, but actually, if you look at cash versus card, cash is still in decline when you compare the two. So it's really important for charities to future-proof their income by investing in this type of technology. And that webinar really focused on that, on the why. Yeah. I'm looking forward to today in terms of the hidden things to watch out for, and then obviously I'm sure you'll mention this later in terms of the next webinar, which is the how, specifically with Paya. So.
No, that's good. So if you did miss the last webinar, there will be some reference links pointing you to where you can catch up on that. We encourage you to, but also get your questions and anything that you've got on your mind into the chat. We are here. We will answer those questions for you. So let's begin. So Ben, what are the key components that make transactions fees in the context of charitable donations?
So it's called Interchange Plus Plus. So there's different components to that. There's the interchange fee, the scheme fees, and then obviously the supplier margin. So we'll go into a bit more detail about what they are as we go into the webinar. But just to kind of touch on these fees and why they're paid, I think it's really important to mention that however you bank income within a charity sector, whether it is cash or card, there are always some elements of fees. And a lot of people forget that they are unavoidable. There's so many people in the chain that obviously want their piece of the pie for offering the service that they deliver. So although we are focusing today on card transaction fees within our contactless environment, just do remember that it is something that's unavoidable. And just using cash as an example, we currently pay anything from kind of 0.5% to 1% to bank cash. And that's just literally physically putting cash into the bank account. And that is, at the moment it's expected the fees on that are going to increase as well. So just bear that in mind. So when you're talking about these fees, some of them aren't as scary as they may be seen because actually compared to cash, they're not that far off. So. Yeah.
Even before we progress on, can you kind of not deliberate because I don't want you to think too much or think too long, but kind of give us an idea of why this topic that we're focusing on is something to really, really pay attention to?
So I think there's something I'll elaborate on sort of a bit later, but it's something to watch out for in terms of transaction fees. Because they're unavoidable, they're a fantastic marketing tool. So I'll part that there and I'll go into a bit more detail a bit later on as to what I mean by that.
I like the way you've done that. Moving swiftly on, so how does the structure of transaction fees differ between charity fundraising and in comparison to other sectors like retail or hospitality?
Yeah, so the key two key components there is the average transaction value and the average terminal turnover. So if you have a look at a charity, you'll have a terminal and the average donation is around £6 to £7. And the average terminal turnover, you're looking at £1,000 to £2,000 per terminal. In a retail sector, you're talking an average transaction value of more like £60 and a terminal value of £80,000 to £100,000. Wow. So when you're talking those figures, that's why the retail market is a lot more competitive, and there's a lot more ability to lower those transaction fees considerably, because you're guaranteed that higher turnover. With charity, that turnover isn't there, and therefore that's why those higher fees are there and present and unavoidable. Yeah.
So just off what you just said, if I am somebody that's new to digital fundraising, contactless fundraising, and I am looking for infinite information about transaction fees, but I come across stuff around the retail, from a retail perspective.
Yeah.
How do I know, or what are some of the flags or signals that I should be looking for to tell me that this is not the thing for me?
Yeah. Okay. So, depending on the size of the charity, there's multiple departments that would be involved in this, from banking to finance governance, to the VAT team, all those sorts of things which will come into play. Oh, and procurement, obviously really important as to whether the product is right for them. There's a big difference between a company sales account and a charity account. So one of the main key factors is VAT that you need to look out for. So a retail sales terminal, when you're looking at all of the processes in-house, you need to factor that in. You need to factor in the VAT, you need to factor in maybe cost of goods and things like that. So you wouldn't get that with a charity terminal in terms of your internal processes. Charity terminals are, you raise X, the fees come off, X goes in the bank account, that's a donation, and then obviously you can add gift aid onto that as well, which is a different conversation. With sales, there's other complexities to it. So all those stakeholders within your organisation would be aware as to what product you can or can't use.
No, thank you for clarifying that. Moving on to the next question, why do transaction fees tend to be higher for charities compared to other industries?
So again, just reflecting back to what I said before, it does come down to that average transaction and average terminal turnover. In a retail sector, you know, if you're giving it to the likes of Tesco's, Sainsbury's, I best name a few because we're not on commission, Aldi, Lidl, Asda, Waitrose. You know that those transactions are going to be there, and not missing out the high street. You know, you've got all those clothing outlets. They've just got that constant flow of income, money coming through. With the charity sector, you're relying on, well, how are the terminals going to be used? We've got our fixed terminals, which might be in a window or might be on a fixed print, an asset, but there's still not that continuous flow. You're still relying on someone seeing, having a connection and tapping to donate. They're not getting anything in return. So that's the big fundamental difference. With a sales terminal in a retail sector, they're getting something in return. They have to pay for it. With a charity, it's optional. You don't have to donate. So the guaranteed income isn't there, and that's why those rates are so different.
Yeah, no, thank you for clarifying that once again. When it comes to hidden costs, right?
Yeah.
Don't want this to be something that we kind of shy from speaking about, but I think what we want to be as informative as possible.
Yeah.
So what are the hidden costs associated with transaction fees that charities should be aware of?
Okay, so what I'm going to try and do, because this is really it's a world that can be very complex, very confusing, and my mind's baffled by it on many occasions. So I'll try and give you the really sort of concise information, and if anyone wanted to delve into it deeper, then by all means, we have a support team here, which I'll come on to, the services that they can provide. But fundamentally, you've got authorization fees. So they're the additional charge that the acquiring bank do on top of their merchant service charge. Okay, so that summarizes authorization fees. Then you've got your minimum monthly service fees. They're the underlying bank fees. So they're split between different categories. So you've got consumer credit, consumer debit. You're looking at 0.2, 0.3% per transaction. But then you've got your fleet and corporate cards. Now they could be anything from 1.5% to 3%. So just looking at them alone, where you've got an organisation like Paya with a flat sort of 2.95%, if someone's using a fleet or corporate card with a 3% bank fee on it, they're making a loss. So, you know, you do need to factor that in when you're thinking about the company or suppliers you're going to as to the service that Paya are offering. And then you've got PCI compliance, really, really important. There are hidden fees involved in that. And again, something that Paya does is they obviously combine that within, which can be obviously significant cost because every terminal has to be PCI compliant.
Yes, yeah. And we've got quite a lot of devices that are that are there, PCI compliant. Yeah.
Thousands.
Yeah, no, that's good. Just in case you didn't know, be sure to get your comments and your questions into the chat, and we are here to answer them as well. We want you to be involved in this interactive webinar. Any points, any queries that you may have, go ahead and get those into the chat as well. So, how does PayaCharity's fee structure differ from that of our competitors, and what benefits do we offer to the charities and that we work with, or those that want to work with us?
Yeah. So PayaCharity have negotiated with suppliers a fee structure, which means that there isn't a separate minimum monthly service fee, there isn't separate authorization fees, and they are all PCI DSS compliance fees. There is one fixed fee of that 2.95%. And that is what they do to bring all that together. And as I sort of mentioned earlier, there's the risk there that if someone's using a fleet or corporate card to donate, that actually Paya are going to make a loss. They're going to be paying more than what they're getting in those fees. Now, let's not shy away from the fact that obviously there's an element of that is, I mentioned earlier, the supplier margin. Obviously, PayaCharity has to make some money from it, but the purpose really of this webinar is kind of explaining that 2.95% is not all going to PayaCharity as a profit. That isn't how it works. There are so many stakeholders along the way who all want their piece of the pie. The acquiring bank, the bank issuers themselves, scheme fees, authorization fees, PCI DSS compliance fees, they all kind of merge together, they all come together, and they make up that figure that then comes up to 2.95%.
Yeah, and I think it's quite beneficial for people to be made aware of, like I said, the stakeholders that are also involved in that pie. Yeah, as well. What strategies can charities employ to minimise the impact of transaction fees on their fundraising revenue?
So my biggest piece of advice is to be cautious of clever marketing. So we all know there's other suppliers out there, and obviously everyone has their marketing skills that they use to obviously bring people on board. You're a marketer yourself, so you're fully aware. But it is just making sure that you're aware of those key bits of information. So for example, the average donation on these terminals is roughly £6 to £7, and that's across the board. Obviously, if you're a charity and you know you're using your fixed terminal in a window, for example, or a plinth, and you set that at £3 or £5, well, you know that your donation is going to be £3 or £5. It's not going to be 6 or 7 on average because you've got those fixed amounts. And you need to factor all of those things in, because there may be marketers out there with some clever wording that give the impression that an average donation is £50. Now, that's probably incorporating some online giving as well, whereas what we're talking about here is contactless devices. And the average donation on them is £6 to £7. So the other thing to watch out for is how they're publicising their transaction fees. So, you know, let's use 1.69% as an example. Quite often you'll see 1.69% plus 10p. If you factor that in, then if someone donates £1, you're actually going to be paying 11.69% on that £1 donation, because it's the 1.69 plus the 10p. If it's a £3 donation, which if you're having a fixed asset, data has shown that commonly, you know, £3 is very, you know, one of the most popular transaction amounts, you're going to be paying 5% So when you're looking at all of those sorts of things, it's always worthwhile just thinking, it may look good because it's 1.69 and you may think 10p is nothing, but actually when you add that on and it's on a per transaction basis, you could be paying significantly more based on your average donation rather than thinking about that bigger picture.
Yeah. Wow. No, that was
intense.
Quite extensive.
Yeah, so as you said, it was a bit intense.
Yeah.
So to try and simplify it, we have got a table, which hopefully is on screen now, and that will just sort of break down. It's very obviously straightforward. It's just showing, as you can see on the screen there, the difference between 2.95%, just to give an example, versus the 1.69 plus 10p. And we'll do that on the £1, the £3, so you can just see what that comparison is. And always just have a think about what your average donation is going to be.
Yeah, no, thank you for the chart, which breaks things down. So we're going to come on to the QVC section of our webinar today. Could you kind of talk us through a live demo of someone donating and what the transaction fees on that would be and where that's going? Is that something that you could do?
Yeah, mental maths.
Yeah. I've got my calculator here.
So we've got the A920 Pro here.
Yeah,
there you go. By far, I think I mentioned it on the last webinar as well. I mean, this is one of my favourite terminals. It kind of does everything you want it to do. So I will do a little bit of a pitch about it again. In terms of, I love the colour screen. It's personalised. You can have your charity's logo on. You've got the multiple donation amounts, and you've also got the receipt printer on there as well. If you wanted one without a receipt printer, you've got the A50 here. We've also got the A77, which is slightly bigger. Wi-Fi enabled, mobile SIM card. So there's the kind of pitch done. But for me, if you're using this at any event, so collections, anything like that, then this is the one to go for, in my opinion. So to show you the process, so on a £5 donation, someone would just tap the screen on the £5, then comes up with the screen to make the donation. Are you going to make it? No. We'll pretend. He doesn't want to pay. Yes. So £5, you tap the card, and then with this one, if it then prompted chip and pin, it would print a receipt. If it doesn't do that and it is just a contactless, it then gives the option to email or text a receipt as well. So that donation's been made, that's £5. So how does that work with the transaction fees? Well, with PayaCharity, 2.95%. That comes out at 14.75 pence on that £5 donation. If we're talking about the other scenario we talked about, which is the 1.69 plus 10p, that comes out at 18.45 pence. So as you can see there, it's just really important to just not think because it's a lower number that it's going to be cheaper. And there are also suppliers out there as well to also consider that are not only charging the fee of the supplier of the terminal, but also adding the fee on as well of what they're offering. So actually sometimes with some suppliers out there, you're talking 1.69 plus 1.5, for example. And then you're in the realms of, and a pence per transaction. So when you're talking that scenario, it's very different. And, unless you're doing an average donation of significantly higher amounts, then you're going to be worse off going for those other suppliers with those split amounts with the pence on per transaction. Yeah, no, it's that's why I really appreciate how upfront we are with our fees and transaction fees and things like that. Moving on to the next question, what role do terminal management systems and gateways play in the overall cost of contactless donation solutions? Well, first of all, with the gateways, I think what I'll probably do is I'm going to sort of put a marker on that and say tune into our next webinar. Yes. We will be talking about how to onboard with Paya and the process, and we'll come on to gateways there because there are obviously different options and some of them do carry different transaction fees, for example. So, but with regards to systems and the additional fees they come with, different suppliers will have different platforms that you can access. So I'm going to use MyPayta as an example. Okay, very familiar. We use the Payta devices. MyPayta has its own platform, which they can obviously charge a fee for use. Now, Paya obviously absorb a lot of those fees. So therefore, we're not passing that on, so it's not an additional charge. Whereas other suppliers won't do that. So you're paying in effect for the terminal transaction fees and a platform fee. So that is another thing to watch out for. And sometimes they're not cheap. You know, you can be talking up to sort of £10 per terminal sometimes on that platform, which, you know, can run into the thousands. And that's per month, sorry. So £10 per month per terminal. Obviously that's variable, you know, depends on the different suppliers. So it's definitely one to watch out for. But again, it's another thing that Paya have done so that, in essence, we offer the complete package. We're saying that we can give you this device, it encompasses everything, and that's the fee. Which, you know, is a lot better than all of a sudden having this supplier doing one thing, platform fee from something else, and it gets a bit messy, whereas we're a kind of a complete package, and that's one of our biggest selling points.
Yeah, no, that's very, very thorough. What are some of the long-term rental options available for contactless donations when it comes to the terminals, and how do they affect the overall costs?
Yeah, so the last question in this one is probably more focused around that cost-effective fundraising.
Yes.
So this one, you know, if you have a look at the brochure, it's like anything. The longer you lease a unit, the cheaper the rate is. Personal opinion, I would always lease over buying. The reason I would do that is because technology is constantly evolving. If you look at the A920 as an example, you've now got the A920 Pro. If you look at the A50, there's an A50S coming on the market, which has got the reader on the front rather than the back. And obviously, if you've bought a unit and then a unit comes out that's got better battery life, or the functionality is improved on it, you've then got to buy another one. Whereas with a lease, you're then in a situation where at the end of that lease, you can swap it out for that better terminal. And like with anything, as I said, the longer the contract, the cheaper the rental. So the upside that we've got here at Paya is we have got loads of different options depending on the activity you're doing. If you're running a one-off event, you know it's your only activity. If you're a small charity or a small department within a bigger charity, and you know that you've literally got a stand for a week at this event, there's no point on renting a unit for 18 months. You rent it for that week. So we do weekly, we do monthly, quarterly, 6 months, 12 months, 18 months. We've got a whole array of options there so that you can decide what the best financial option is for you, depending on what activity you're doing. My biggest piece of advice when obviously coming to PayaCharity, have a look at your activity. Do a bit of research about what you're doing as a charity. Come with information about how often you're doing activity. Is it a one-off? Is it throughout the year? That'll kind of aim towards what terminal you're looking at. And then have a look about what the prospective average donation is. And that will help you understand and see that actually that flat fee that Paya offer is not only competitive, but it's also great in terms of it encompasses all the fees that you don't need to think about, which, just to recap, obviously you've got your interchange fees, scheme fees, the hidden costs, the authorization fees, minimum monthly service fees, PCI DSS compliance fees. Paya takes all of that away.
Yeah.
You know, we really are a kind of a one-stop shop.
Yeah.
You know, you can come to us and we give you a complete package.
Yeah. Final question. I've not prepped you for this one.
Okay.
What advice can you give watchers, listeners, readers about cost-effective fundraising? What to look out for and how to kind of progress, even as we kind of steer towards Christmas fundraising in preparation for that? So with Christmas fundraising, anything like the campaigns, have a look at the activity. What terminal is best? So one of the best things to ascertain first is, are you looking at someone to just tap and go? Are you having an interaction, for example? So work out what terminal is best first.
have a look at the projected average donation. Consider that, and that will help as well. And really do have a look at how people are marketing things. Don't just see a low number and think that means you're going to be better off. Do some scenario-based sort of experiments as to, if I raise this, what would I pay? If I raise this, what would I pay? Because it's really important to have a look at that, because it can be misleading on the way things are marketed. I'm not saying companies are misleading you.
Yeah.
We live in a world of clever marketing. You know, nobody's lying. It's just about how it's marketed.
Yeah.
So do watch out for that one. But my biggest piece of advice, I think I said it last time, I'll say it again. If you are considering going into the world of contactless, do it. Even if you do it as a trial first, you know, it's so important. And you can do a small trial. Pay or offer those short-term leasing agreements. You could literally pick a particular event or a campaign. You can lease a few units and give it a go. Because, you know, you'll see from that trial the potential, and then you can see the projected growth over the next 3 to 5 years. It took the RNLI 3 years to, you know, we projected £1 million to be raised this year from contactless units. That wasn't done overnight, and that's through us testing terminals, testing amounts on terminals, testing them in different environments, at our assets, at our collections. So, you know, getting it right isn't going to happen overnight, but income growth can be there literally from day one. All you've got to do is kind of, you know, jump into the deep end and get some units.
Yeah. If you don't know, it won't happen. If
Exactly.
you don't try, it won't happen. Thank you for another informative, very informative conversation all about transaction fees, and also the cost-effective ways for fundraising. So thank you for another session on this webinar, Ben. And we hope you guys will join us on our next session, which you'll get some more information about right after this. See you guys later.
Bye.